From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 16th, and you're listening to the HPS Macrocast. I'm Matt McDonald, in for Tony Fratto this week. It's a whole different cast of characters today on the Macrocast. From HPS, we have Michael Steele and Meghan Pennington. And from Markets Policy Partners holding down the fort, we have Brendan Walsh. Today, we're close to Halloween, and all the speculation is on whether we're going to get a stimulus trick or a stimulus treat out of Congress here, closing in on the election. Today, we thought we'd talk about that for the full time and to help illuminate everything. We brought in our colleagues, a couple colleagues on the HPS side, Michael Steele, who, among other things, worked at House Ways and Means and knows a lot about budget and budget process and all that good stuff. And then Meghan Pennington, who worked in the Senate for Democrats on the Finance Committee and worked on tax reform, which certainly is going to be a focus going forward if there is a Biden administration. But let's start with Brendan and the market's perspective here on why the markets are expecting stimulus, and that I feel like every time I come on and check in on the Macrocast, everybody's talking about how it's going to happen, and yet here we are.
Yes, definitely. And I think so, people probably don't know, but Matt and I are the same age and we grew up one town apart. So when we were going to be the only two on this podcast, we decided rather than reminiscing about Western Massachusetts, it was probably better to get some experts on and talk about something that matters.
I stand by that decision.
But the market always has been very excited about a deal. And I think what the market is pricing in is, especially as Biden's poll numbers have gone up, that you're either going to get $2 trillion now with a bipartisan deal, or you're going to get $3 trillion in January, February. So in terms of the market, they're willing to discount it and just price it in now. The issue lately, though, has started to get concerned because McConnell's really putting his foot down, and he says $500 billion is all I think we need. So there is now the concern that if you don't get the blue wave and people do, have split ticket votes, and the Republicans are either able to keep the Senate or, be enough that the Democrats don't have enough votes to pass their own $3 trillion, that you could now just have this $500 billion or maybe nothing if they want to be very obstructionist. So I think that is what is the market's digesting. And I'm really, really interested to hear what you guys think about it.
So, Steele, what's your take on what's going on in Congress in these deliberations? The thing that the question in my mind on some of this stuff is like, yeah, I don't know if we just get 500 billion versus whatever, $1 trillion, $2 trillion. What's a couple trillion between friends? So, like, it does have this quality of. It really depends on the time horizon that you're talking about. I mean, this is not actually the first stimulus addressing the pandemic and the economic response. It's not clear to me that, like, if there's a $500 billion stimulus now, there wouldn't be more money depending on how long this goes. I mean, the huge dependency is time. And it's kind of odd, at least for me, to watch kind of the back and forth machinations when this is it's a dynamic environment. So we don't really know what exactly we're going to need over time either.
Yeah, and I think that the needs of individuals and families are to some extent divorced from the needs of the market. I think that there are
exactly
protections and benefits that are expiring, that are going away or have expired already, that a lot of families are depending on, that don't make that big a difference in terms of the markets. I thought for a long time that I still think there was a window to get this done. That window was in August, and it was a 1.5-ish trillion dollar deal in August that would have passed the House with Democratic votes, passed the Senate largely with Democratic votes, and then a few vulnerable Senate Republicans. Those are the ones that are in tight races, moderates like Susan Collins, and maybe a couple of the retiring members, maybe Lamar Alexander, Burr, et cetera. And for whatever reason, as everyone has kind of focused on the discussions between Secretary Mnuchin and Speaker Pelosi, those really couldn't matter less. I mean, the speaker has gotten further from a deal in the sense that she's at a $2 trillion plus figure and not budging either on that top line or the details of how it's administered or implemented. Whereas McConnell has kind of drifted down to a, Senate version of the Hastert rule that not only does he want a smaller package, but he's not willing to pass a package that doesn't have the support of at least half of his caucus. So the possibility of a largely Democratic bill that President Trump was okay with has gotten further and further apart. And there's been a lot of kind of people who do congressional coverage have been frustrated at the optimism of the markets, because it's been pretty obvious really since Labor Day that this isn't going to happen, at least before the election.
Well, and I think we've moved into a stage where it is more about the content than it is about the dollar figure. I think, Steele, you're absolutely right. In August, when you had, we're looking at the heating up of election season, people are going to have to go home, even though we're virtual. This is still like campaign crunch time. You have members that are worried about going home and defending what they've done to their voters. Now we've clearly passed through that phase and are in a totally different, we're starting to have this is, I believe, the beginning of the conversation we're going to have in the lame duck and then in the new Congress, which is Republicans and Democrats and their fundamental differences on how they think you recover from this crisis. And Democrats are going to say, look, you have state and local governments that are going to go broke. We're looking at layoffs of essential personnel. You have to do support for them. There's this lingering issue of liability protection for business owners, and Nancy Pelosi and Democrats are going to reject the notion that you can just broadly open up the economy and not put a ton of money behind testing, behind contact tracing, support generally for the healthcare system. I mean, we're going to just start getting into those fundamental policy issues. I don't see, like, even in the lame duck, I don't see a scenario where Democrats accept anything on liability protection unless you get much higher than 2.2 trillion.
So Meghan, I want to go through the Democratic game theory on this. So we have the election right around the corner that will decide. They'll, at least for Democrats, they'll certainly know how, the election is. I think the conventional wisdom is the election is trending Democratic. I don't see any reason why that. And there's a lot of caveats going back through the years, right, but I would say that if you start with that premise, is that at a minimum, it doesn't feel like anything's going to happen at this point until the election, just because there's so much that the politicos will now know about what the new power structure will look like. Is that fair?
Yeah. I think that's right. And so, yeah, I agree. I don't think there's anything happening on stimulus until after the election. I think in terms of scenarios, I don't see a scenario where the House changes leadership. So there's one scenario where Donald Trump wins. I think then Senate is Republican. And then that is a crazy, who knows what Democrats are going to do then. They have no power, and I don't know what their position will be. If Joe Biden were to win the White House, you have the question of, is Senate go R or does Senate go D? I think regardless, you will see Senate Republicans that want to do something quickly because they know the second bite at that apple is going to be bigger and a harder fight. So you could see, I think, the idea of why not just pass something and then go back to the well. I think you could see that. I don't think it happens if you have that liability protection for businesses without some huge number for other domestic health priorities. So I see another fight. And then you have the appropriations issue that's going to come into play. We have a CR that will expire. I believe the date is December 31st. Steele, is that right? I think I looked that up, but we're going to have a fight on appropriations. And then we're going to start getting into just the general administration of government. I mean, how are we going to, Republicans are going to say we can't just be writing blank checks. We have to pay for these things somehow. Democrats are going to start looking at tax reform and saying, hey guys, we have individual rates that are expiring in 2025. You gave corporations a huge tax break. And, some would say that was the Democrats will look at that and say, here, we know how to pay for it.
So there's a scenario there where, well, if you assume for a second that you have everything go Democratic, I think you're right. If there's a Republican Senate or Trump wins re-election, there's more negotiation ahead. Who knows, right? But if you have the Democrats take the Senate and the White House, then what you're saying is that there's no reason for them to kind of pocket a stimulus package that's lower than they want and then go back to the well, because presumably that would include things like litigation protection for business that substantively they don't want. And so it really all comes down to the particulars of of what's included in the legislation.
I think it comes down totally to the content of the bill, and it's less about the dollar figure.
The liability point is really important, and that's kind of lost on the market. They're just kind of focused on the numbers, and that doesn't really come up. That's actually probably the most important reason why we haven't got a bill.
Yeah, I sort of have a slightly different view than Meghan on the sequencing and what we're looking at if there is a blue wave, if there is a Democratic sweep. The current government funding actually runs through December 11th, I believe. Either way, the point is they have to do something in the lame duck. I would see what happens in the lame duck as a bridge to a larger package that a new President Biden presumably wants as his first 100 days defining thing, which is very similar to the 2009 stimulus bill, American Reinvestment
and Recovery Act.
Reinvestment, ARA. Something similar to that, something that's a broad brush COVID response plus economic stimulus plus infrastructure, transportation, et cetera. A very big bill very early in his presidency. And what we're doing between now and then is kind of a bridge for temporary and immediate relief to get you to that bill. However, it's not clear that everyone is kind of aligned on that right now. I mean, Speaker Pelosi has been really clear she wants something big stimulus wise in the lame duck because she wants everyone's hands on it, because she's worried about a snapback of Republican concern about fiscal responsibility, and she wants them to be bought into on this big recovery package rather than waiting for a Biden administration to get that done. I just don't know that that's reasonable, particularly if, God only knows what President Trump looks like in a lame duck scenario. Still, like the tax reformers used to joke, all we need out of a president is 2 functioning digits to sign the bill. Even that may not be guaranteed on a COVID stimulus function. And if the president is, in some sort of denial or post-election litigation or the sort of turmoil that we could see if it's not an unambiguous result. Remember that we might not know on the Senate until December because both Georgia races are headed for runoffs.
See, I'm not sold on Biden's first thing being a huge stimulus bill. Maybe it's stimulus but I just think that package, if Biden wins, especially if he has a Democrat Senate, it's like, I guess it could be stimulus, but it's gonna be stimulus plus infrastructure, the carrying economy. It's gonna be like a massive remaking of the domestic economy. So I guess it could be a bridge to a stimulus, but I don't even know. I think it would just be so broad that calling it stimulus would be almost like cute.
Well, I think it'll be like ARA in the sense that they will use the current crisis as an excuse to pass a variety of liberal policy priorities. There wasn't a reason to have green energy in the stimulus. That wasn't shovel ready. It was just a policy priority that Democrats felt was underfunded under President George W. Bush.
Well, and I do think you're going to see Joe Biden will be particularly focused on making sure he will try to remake the domestic economy, but it will be like laser focused on this is putting you back on track. So I do agree that it will be all there will be a tremendous focus on. I haven't forgotten that everybody's bank accounts are suffering and people are scared about their economic future. I think there's going to be healthcare, shoring up Affordable Care Act, a huge infrastructure spend, and infrastructure will be tied to making schools safer, ensuring that businesses and schools have PPE. I mean, it'll just be
early
massive.
childhood education obviously will be a priority. And I think that you'll have advocacy groups on climate change trying to make that a vehicle for those efforts as well. So I totally agree.
And that will be
a
sticky.
Very big and defining event. But I just think we're going to need some immediate temporary relief during the lame duck to get us to this big bill in the first 100 days.
Yeah, and I think that's an important point because we're talking about politics now, but when you look in terms of the economy, like the claims number, things are going the wrong way, and it's getting colder, and COVID rates are spiking, and the money's gone. So we can't wait till February. There's a lot of people that need it. So do you think there's an economic scenario where politics gets pushed out the door because it's just so clear that we need to spend something?
I don't know. I'd ask you that.
Yeah. No, I mean, I don't think there was something dramatic about the market action and the fears in 2008 that led to very shortly before an election, putting politics aside, to do what was economically right. You also, frankly, had just some more statesman-like figures who were involved in that discussion.
And the market was at the lows, down. We thought everything is ending. The market is back to close to the highs now.
Right, and it's sad because the suffering is real, the impact on families is real, but it's not dramatic or visible the same way. So I don't think you'll see that sort of bipartisan coming together before the election.
Context on that before an election ends up as like a little bit of a hot potato of who's going to get the blame for X not happening. And the reality is that once the election is done and the votes have been cast and the consequences are there, and if whoever ended up with the potato is just living with it. And so the immediacy that an election induces in terms of pressure for that type of thing is gone. What is that, Brendan? What does that timeline imply for the markets? Like, I mean, my read, and I'm curious what you would say to this, but like my read of either of these kind of scenarios that Meghan and Seal are laying out doesn't feel like that's baked into what the markets are expecting. It feels like they're more calibrated around the general idea of a Biden administration and what that would entail, as opposed to the particular sequence of events, spending, and approvals that happens kind of between now and February. Yeah, and when we talk about markets, we have to talk about each individual market. The dollar and the bond market are not particularly optimistic. Rates are very low, so it's not like every market is pricing in. The equity market is much more excited about this. But the makeup of the equity market is weird now too, because basically the entire rally has been because of the FANG stocks and tech. Right. So they benefit from COVID. So the longer we stay in COVID, the more we use Zoom, so there is a little quirkiness to the saying what the market wants, because, actually getting a bunch of stimulus and handling COVID could actually be somewhat bad for the market in the short term, because some of the tech stocks might go down. And then there's such high weightings right now that, for the short term, you could have that rotation. But I would say that the equity market is not caught up in the timing as of now. They're more focusing on $3 trillion.
That's so interesting, by the way, because I was just looking at something yesterday. So it's like the tech stocks that you just mentioned, but then there are also like Peloton and like those other at home like companies. I think somebody was saying in March Peloton stock was at like something like 15, and now it's at like in the 130s. It's like, so like all of these companies that are like adjusting quickly to make sure that people at home have like their creature comforts that can like try to simulate regular life. I mean, what happens to all of that expansion when when we start going back?
So I mean, today Pfizer announced that they're going to hopefully in mid to late November apply for emergency use of their vaccine. So we're getting closer, knock on wood. But even then, you're talking about 6 to 9 months before everybody can get it.
Well, and to go on a different track, a blue sweep also has pretty substantially different considerations for antitrust and legal challenges, regulatory challenges particularly for those tech stocks that are driving the rally right now.
Yeah, and that's a topic that is definitely getting a lot of and also the antitrust is a little confusing because the Trump administration isn't really a Republican administration, it's the Trump. So their view on, Silicon Valley is probably a little different than, the average senator Republican. So it's hard to digest exactly what Facebook or Google happens in terms of the antitrust under Biden versus Trump. Biden might actually be better than Trump, but I don't know. What's your opinion on that?
Well, I mean, particularly, conservatives seem to have concerns about big tech from a First Amendment free speech point of view. The belief that they're shadow banning, that they're and the Twitter and Facebook's handling of the New York Post story this week on Hunter Biden only intensified those concerns. But I don't see that impacting the business of Facebook, Google, et cetera, in the same way as, say, antitrust limitations and really kind of going back. And it seems as though a lot of left-leaning policymakers have decided retrospectively that allowing Facebook and Instagram to get together was a really poor idea, and anything remotely resembling that will be blocked in the future. And if there's some way to unwind some of those combinations, they're going to be looking to do that. Which I think of as a much bigger threat to the business than the discussions around political speech and the First Amendment.
Unless the discussions around speech start reopening Section 230 and those protections. I mean, that would have a huge impact on, certainly on startups in that space, but also the companies themselves. It's different. It's slightly different. The talk around tech antitrust and breakup tech and techlash and that sort of stuff. It's not a very cogent conversation in a lot of corners. There's not a lot of, it's not super well rooted in antitrust law. It's just kind of I'm grumpy. I don't like them for X, break them up.
And that's what the market kind of views it as, is it's hard to do it. And it hasn't happened so far. So if we're on the 1 yard line, that's when they'll pay attention. So ironically, it actually could be good for the market. A lot of investors want these companies broken up. Investors have constantly been want Google to sell off pieces because the sum of the parts would probably be more than the whole.
Meghan, you're talking about the companies that are trying to simulate a real life at home. My oldest son got an Oculus at toward the beginning of the pandemic, and one of the games was Office Worker, where he goes into virtual reality and has to make coffee and photocopy things. And he was telling me that it's very fun, but I have to say that it hit a little close to home, and I've elected to take a pass on that. So.
Yeah, well, it's like the computer icons that show regular dial phones, and people kids now are what is that? Yeah, how do we why would anybody use a Rolodex or a book to write down people's phone numbers?
Yeah, I was watching a football game last year, and one of the QBs, they handed him one of those phones. He looked at it, and he put the whole thing up to his ear.
That's hilarious.
He had no idea what it was.
No, all right, there's so many old jokes to be made, but let's take a break, and when we come back, we'll talk about the week ahead. You're listening to the HPS Macrocast.
Have you heard the news? The HPS Macrocast is expanding into the HPS Podcast channel, which offers our listeners access to all of Hamilton Place Strategy's podcast shows in one convenient place. The HPS Podcast channel is home to all of our new and past podcast episodes on your favorite podcast streaming services: Apple Podcasts, Spotify, Amazon Music, Google, and more. If you're already subscribed to the HPS Macrocast, do nothing. If you aren't, subscribe now to have weekly HPS Macrocast episodes and the latest from HPS Insights delivered straight to your podcast streaming service. To learn more about our podcasts and other original content, visit hamiltonplacestrategies.com/insights.
All right, we're back on the Macrocast. Brendan, what do we have for the week ahead?
So earnings season started this week, so it'll continue obviously next week. And so far, actually, the earnings have been quite good. It always kind of starts with the big banks, the JP Morgans and Morgan Stanleys of the world. And for the most part, the earnings have been getting good. A lot of it's been on a huge trading revenues. And also mortgage demand has been through the roof. But the market kind of discounted it. The stock's huge beast, but they're only up slightly on the week. And actually, so in terms of some stats, so the numbers coming into the third quarter, analysts had expected earnings to be down 26% year on year, and now, if the first quarter holds, it'll only be down about 14%, but only 12.3% of the market cap as reported so far. So far, so good, but it hasn't really driven the market significantly higher. I think part of that is fears of the second wave of COVID, and also what we were talking about exactly today, that maybe the markets get their confidence in a huge deal might be getting shaken a little bit.
Yeah, it also feels like, it's on some level we're getting, as we get closer to having an understanding of what the future looks like, right? Of whether that, there's like hints of another wave in the winter, and everyone has that theory, but it's not exactly, Europe looks bad, but here it's not entirely clear that that's going to happen the way it could. You have the election in a couple weeks where you'll know a lot more about the future then. It just seems like, on some level, it seems like if you're following the market, it seems like an odd time to, it's just a lot of uncertainty that'll be resolved fairly soon.
It's a couple percent below its highs. So it's not like, it's cheap to buy. So I agree. I think what you're just seeing is people just waiting, and it's, let's talk to me in like November, and then I'll make some bigger decisions. And today, actually, we got a very good
I will talk to you in November.
Yeah, I know. Yeah. Today we got a good retail sales number, which, going back to the discussion, could be bad for relief bill negotiations. So if people are spending money, we don't need to give them money.
All right, that's it for the Macrocast this week. I'm Matt McDonald with HPS. Thanks to Meghan and Steele for joining us. Thanks to Brendan from Markets Policy Partners. Have a great weekend, everybody.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.